I'm joined by Oliver Slope, and he is with Blue Line Futures in Chicago. Oliver, good to have you on board. I was mentioning earlier this morning that there were no overnight export sales. I guess I need to clarify that a little bit. Part of the reason that we have the corn under pressure today is because, we didn't have a sale. We actually had worse than that. We had a net cancellation, and we can bring that up on the screen. It was corn. It was China again. But they canceled 327,000 tons of corn. There was old crop corn that they had purchased earlier. And they say, no, never mind. We don't want it after all. Seems to me,
Right.
Oliver, only China can get by doing that.
Yeah, absolutely. It's a pretty big one. 327,000 metric tons, or about 12.9 million bushels, and it's the first daily cancellation that we've seen since February of 22. So I think that's part of the reason why we've seen the market under pressure here as of late, maybe in the anticipation of that. I was hoping that we'd see the opposite headline, because last month, early March, when we were at these same price levels for July corn, we started to see a string of flash sales. So we thought there might be a little bit of a floor in the market and see some flash sales. We got the opposite, and that's not the greatest way to start the week. But I think there's still pretty good technical support in this market. If you look at that July contract, 595 to 601 was the low end of the range going back to last March. But going back even further, it's the gap from July 22nd. So there's a lot of good technical support down here. And from a risk-reward perspective, I think we're a little bit overdone to the downside, and it represents an opportunity to see if we can't get some sort of retracement to recover some of the losses that we saw in the back half of last week's trade.
Well, you can definitely tell that you have the most weakness on the nearby contracts. Not as much in those deferreds out there. For example, that new crop December contract. Let's take a look at these prices, how they stand right now. So let's go to July, and we're down 8 3/4 cents at 606.5. So we're off of our overnight high here by about 11.5 cents. But we are about 2 cents off of our earlier low. December corn now 3 3/4 lower at 544 1/4. Now, by the same token, you have the soybeans going the other way today, and that's kind of intriguing. July soybeans now 10.5 higher at 1459.5. November up just a penny and a half at 1287, make it 1 3/4 higher now. So what's going on with soybeans? Why are they so strong in the face of the bearishness in corn?
Soybeans are certainly trying to find their footing. They've still got some work to do. They're treading right around the 100-day or the 200-day moving average for that July contract. And I'm pretty upbeat, as with corn, that we can see some sort of retracement from the back half of last week's sell-off. Looking at upside potential targets in that July contract, you're looking at the gap from last week near 1477, as well as the 50-day moving average up near 1480. So if we can defend the 200-day moving average to start the week, I think we can claw back some of those losses. The market that just really isn't gaining any sort of traction at all, though, is that wheat market continues to get pummeled. We're back, last week at this time, we were talking about a potential breakout above the top end of the range. And, just 7 days later, we're right back here at the bottom end of the range, and what we're kind of calling a must-hold area down here near 660.
Okay, so July is at 663 1/4 right now. That would put us down about 9 3/4 cents. A lot of concern about the Kansas City market with the freeze event over the weekend and dry conditions in the high plains. And yet you have July KC wheat down 7 right now at 818.5. On the low of the day, now 817.5. Now we're down 8 cents on another new low for the day, and we're off of our overnight high here by 18 cents now. On the spring wheat market in Minneapolis, you have July now up a half cent at 846 1/4. Technically, this wheat market just does not seem to have any strength underneath it here to keep it elevated. We'll come back in just a moment. We'll talk more with Oliver Slope. We'll talk about our livestock trade in just a moment.